Hello, ladies and gentlemen, this is boy Sam from Armada Trading here, and today we're going to be doing an NAKD update video. And the reason for this is because I saw a sub wanted it. So, we're always here to fulfill our subs orders. So if you don't have any stocks you want us to cover, feel free to. I'll leave it in the comment section down below. And let's get right on with the video. So, as you all know, before we go into the actual stock analysis, I always like to give you all an understanding of the company and what it does and how it makes its money. So first and foremost, we're going to do the company profile of NAKD. So Naked Brand Group Limited designs, distributes, wholesales and retails women's and men's intimate apparel and women's swimwear. The company offers its products under the Pleasure State, Davenport, Lovable, Bendon, Freeform, Naked, Vavoom, Evolve and Hickory brands, as well as through licensed brands, including Heidi Klum and Fredericks of Hollywood. It sells its products through company-owned retail stores in Australia and New Zealand, online channels and wholesale partners in Australia, New Zealand, the United States and Europe. The company was founded in 1947 and is headquartered in Auckland, New Zealand. So that is a quick company profile and what the company is. So you all can make your own judgments of whether this is something that interests you. So the shareholder statistics are actually really easy because we own a very large majority of NAKD. We own 99.64% of NAKD, which is just insane. Like, these are all retail investors, I think. I'm not sure anyone else in that other category, but majority of that will be retail investors like you, like me. And, we're doing very, very well in this company. And the good thing is when you own a large stake in the company is the company always wants to please the public, aka us, because we have invested our money into it. So they are going to feel obligated to try and do well with our money. And also as well, there are 0.27% of bank investment, 0.09% of traditional investment, and 0.05% of hedge funders. So that is the shareholding composition. So you may be wondering, what revenue streams does NAKD have? Now I'm here to tell you that they have a very large majority of e-commerce, which is like international sales. Now they have 35.46% in e-commerce. They have 31.42% in New Zealand retail, 15.85% in Australia retail, 7.85% in Australia wholesale. They have 4.39% in US wholesale, 3.87% in New Zealand wholesale, and 1.17% in Europe wholesale. So one reason why I think NAKD could be a very good buy right now is actually their financial composition, their cash flow on a cumulative quarterly basis. Now, I did try and find some more updated figures. However, I couldn't find them on Moomoo itself. And if I do find some better updated figures, then I will actually insert it into the video. But what I'm reading right now, the end cash position is currently up by 1,090% from their last year in 2019. And this was taken on the 7th of July, 2020. So think of that as you will. And I think that is a very, very strong cash position. However, because it's a cash flow, we don't know how much of that has come through liabilities. And that is what I'm going to get onto next. So, unfortunately with NAKD, one reason why it's not in the best financial position, even though I think it is still in a good financial position, but it's not in the best financial position, is because their liabilities currently outset their assets. They have more liabilities than they do assets. And that was the most recent actually quarterly earnings release, because this data here was collected in 2021. So this is very recent, and their current liabilities are higher than their assets. But that's not the be all and end all though, because they can still come back from it, because their current ratio has actually improved since the last quarter. So they are becoming better. Although there's not sustainable growth, there is signs of growth, which is always a positive sign in the company. And I'm going to get on to another reason next. So using sources as Fintel, I have discovered that NAKD currently has a short ratio of 32%, and this was last updated on the 19th of February. So this is very up-to-date data, and the short volume ratio is 32%, which is significantly high. So there is very much a short squeeze that could happen. And I'm going to also show you that the current short shares available is 700,000, and the short borrow fee rate is 15.23%, which is very high. So if they were to short this stock, they are going to be paying back a heck of a lot every time they short it, because the borrow rates are so high right now. So I genuinely think this could see a squeeze in the near future. Now, moving on to the graphical analysis, I'd just like to say that I genuinely think that this right now is quite a good buy opportunity, because as you can see, we're currently in this flag formation. It's almost like a canal, but it does have an endpoint to it. Now, what I think is going to happen is that this right here is going to breach out of this canal, probably around about here. And then we're going to see a nice little bit of an incline. And I genuinely think short term, this could go all the way up to 1.87. However, to cover myself, I'm going to put it at 1.6 as a target set price. And if you don't know what I've done here, is simply a Fibonacci arc, which sort of, it's a good indicator of where a stock could go. And through this level of support here, which is a very strong level of support, may I add, it's currently got 5 touch points, which is actually a very strong structure to it. I could genuinely see this stock rising to about at least 1.43 realistically. So one point I actually forgot to touch upon within the video, because I've already recorded the video, but I thought I did sort of see this and I forgot to mention it within the video, so I thought I'd just edit it in. So the volume ratio is actually very high right now, and this is a very good sign, because normally what happens is when a volume is high, that means that people are buying this stock, and there's a high demand for this stock, which is it's going to raise the price of the stock eventually. But we did see the sell-off sort of overtake it here, which explains this dip, like sort of around this area. But we are starting to regain again. As you saw on the 19th, there was another increase within the middle of the market open. And it just shows there is a high volume going into this stock. People are hyped about this stock, and people want to enter into this stock. So I think this is another influential factor into why this stock could see a big increase in the near future. So I'd just like to make this clear that I'm in no way, shape or form a financial advisor, and please take anything I say with a pinch of salt. I'm simply a university student studying business and management, and that is all. So again, stocks are battlefields. Always do your own research before entering the battlefield, and also only put in money which you can afford to lose. Now, to add to what I've already said in this video, I just wanted to show you a quick article on Yahoo. Now, do not take this into account, right? Because there are actually promising signs in this article, and I know that what you're seeing on the first couple pages is bad, right? However, as you scroll down, you start seeing that NAKD is actually putting stuff in place to build a more e-commerce centric platform, and they have regained the rights to their name, their identity, which is always a very positive sign in the company. And one of the people within NAKD says, "We have experienced success with our e-commerce business and are prepared to rapidly expand our existing digital footprint as we pursue the development of a single world-class technology platform serving the intimate apparel industry and seek to become the conduit for consolidation." As part of the press release announced in the last resurrected, Naked Brands cited the 6.5 trillion in global e-commerce sales expected in 2023, which is a very, very impressive figure. And if they do pull this off, this is a very, very good long-term play. Now, I don't really understand why Yahoo Finance decided to go with this sort of title, but what I'm reading down the bottom here, this is what we should be focusing on. 2023, they are expected to make $6.5 trillion in e-commerce sales, which is just insane. And that's what businesses have to do in this day and age, especially with COVID. The shops aren't open, so you have to expand and you have to digitize your actual business to really let it take off. So just before we exit off, I just want to say that I'm in no way, shape or form a financial advisor. I will put a disclaimer in the video somewhere, but I just wanted to restate that because I don't want to influence your decision. I want you to do your own research before entering into this stock. But that's going to be it for today. I hope you have all enjoyed this video. If you have, please remember to hit that like button and subscribe for new. And I'll see you in the next video on the channel. In a bit, everyone.